Okay, so it's Thursday, November the 7th. You should be able to see that up here at the top. And I wanted to give you a status on the trades that we're in, these credit spread trades, and then show you about closing them. First one is Apple. Looks like it's ready to close. Looking between these two, we took in $45 and it's now worth $1. How do we find that out? We look at the difference between these two and the difference between these two. The trade price is how much we received. The mark is how much it's currently worth. Click on the first one, second one, and right click to create a closing order. Create closing order. We're going to buy the vertical back for $1, debit, confirm and send. We'll see, give it a minute to do it, to fill, but it's already in the working orders. All right. Then we can look at Adobe. Now, Adobe at this point, this is a call credit spread, a 500 call credit spread is the sell strike. Looks like current price is 497. Trade price, we took in $36, 156 minus 120 is $36, but it's currently worth about $90, right? Looks like it's currently worth about $90. So 252 minus 160 is about $90. It's not ready to close yet, but what we can do is we can set this, okay, it says we took in 30. We can set this close order for what we want it to be, and we want it to be about $5, right? We can set it for $5. But we also think about from a stop loss standpoint, we also want to do maybe a 2x or 3x. We took in $30 we talked about, and now if you think about what is your 2x, that means maybe at 90 you may want to close it because you do want to watch your risk management. So I'm going to change this here to a first trigger OCO. That way I can also put on a duplicate order, create duplicate order. So one of these can be a stop loss. I'm going to do a stop here, and I want the stop to be, well, what did I say we took in? $36. So 36 times 3, 108. 369, $108, right? $108, 1.08 we're going to use as our stop. That's taking the amount of we took in premiums and multiplying that by 3. That says I'm willing to walk away from the other part of the other $72 of my money, right? 2x, 3x, you should really think about which one works for you. What's a good amount that you want to use as your stop loss? All right. So I said I want it to be $5 if it's, I'm going to keep the profits, or 108 as a stop loss. And I'm going to confirm. Oh, I want to go back because I want to make sure that it's good till cancel. Make sure it's GTC. You want it to continue to run in force until you're done with it. 1.08. Was there a decimal in the front? Yep, that's why that did that. Okay, 1.08. Confirm and send. I'm going to show you in the monitor tab that Adobe trade shows that if it's $5, it will close. Otherwise, if it gets to 108, it will also close. Currently, it's worth 80 something, so it's in between those two. It's not at the place where it's ready to close yet on either side, but you put in your stop loss and you put in your take profit. AMD trade is an iron condor. One side is breached, it's in the money, and the other side is not. So let's close the side that is profitable. This side we took in $16, 57 minus 41, $16. I'm going to select both of those. It's currently worth $1. So we're going to right click, create closing order. $1 should give us a way to close this, confirm and send. Now I do want to go back to the AMD to look at the side that is breached, right? On this one, we're just talking about 2x or 3x. Now something's getting ready to happen this afternoon. We're going to have FOMC. Minutes are going to come out at 2 o'clock, which is about a couple of hours, right? So I'm going to leave this other side on, even though it's at $70 and I've got $20 is what I'm looking at for what I took in. So $60 really should be, and 3X would be my cutoff place. I'm going to leave it for a little while now just because I want to see what happens after the FOMC minutes come out. It's currently fully breached. You see that my strikes are 147, 148, and the price is at 148.98. We don't know what the how the FOMC is going to affect this trade, so I'm going to leave this side going, even though it's on my watch. It's definitely being watched. Okay, look at Costco. Costco is also an iron condor where one side is ready and the other side is breached, right? Costco 902.5, 905, and we're at 917. Now this is, $12 higher than my strike. I'm not a fan of that. So I'm still going to leave it though because I'm also going to leave it for FOMC. Keep in mind too that these things expire on Friday. So today's Thursday. You're going to want to maybe give it till end of day Thursday, Friday morning to see what kind. Let Theta give you one more day of decreased premiums, so that way you could see if maybe it turns around on Friday and you can get out with profits or get out with a break even, right? But definitely you want to watch your risk management. Looks like CVX is we took in on $15 on the put credit spread side. 61 minus 46 is 15, and it's currently worth $1. So we're going to set that to close. Select both sides, create closing order. We're going to close it. I'm fine with closing it for $2. You, of course, can change it to $1 if you like and just wait. That's fine. On the call credit spread side, we received $47 and it's now worth about $48. If you see, you can select both of these and then select the totals. It shows that you were down a dollar basically, and it's worth 49.50. Well, we received $47. This one's not ready to close yet, but we could put in the close order if we want. Set that up earlier. We took in 40 something. So let's say I closed for about 30%, 20 to 30%. So if I took in I'm going to close it for, I like a nice $10 range. I took in 40 and some change, and I'm going to let it close for 10. So put it at good till cancel. One of the reasons I like to put on to put the close orders in is because then I can look in the monitor tab and I can see that I want to close it for $10, but it's currently worth $48. I'm asking, I want to close it for 10, but it's currently worth 48. And I can see as it's continuing to work, I can see these in one glance. I don't have to keep doing the math between those two to figure out what's the value of the trades. I don't have to keep doing that. Okay, that was Chevron we looked at. Now let's go to Google. Looks like Google, $52. Looks like it's ready to close right now. All we have here is the put credit spread, which this came off of our weekly list. Google both came off of our weekly list. That's ready to close, right? $52 in premiums we took in for Google. For Google, we took in $41, looks like 92 minus 51. We took in $41. We're going to set this one up. You can show here that it's ready to close. It's worth $41. I'm going to right click for create a closing order, and I'm going to change this to $1 so it'll close on its own. Set it to $1. All right, let's continue on. Almost all these things came from our list, either came from the list, our weekly list, or came from the alerts on Peakbot. So 3M, the call credit spread side is breached, but the put credit spread side is worth, looks like $8. We took in $14, but it's worth 8 now. I don't want to close it yet, but I will set the close order. If I took in 14 and it's now worth 8, I want to close it for about $3. I'd want to close it for about $3. Okay, I'm going to make this good till cancel. $3 is about 80% of it. I took in 14, 20% of that is 2.8. So $3 it means I'm keeping 80% of the premiums if that goes the way I want it to go. The call credit spread side though is in the money. Looks like the current price is 133. It's worth about $90. I'm also leaving this one to see what happens with the afternoon and what happens tomorrow. So I'm leaving 3M to keep working. Merck is ready to close. You see here $36. It's ready to close. I'm going to go and do both. I'm going to do the sides individually to close them. Create a closing order here. I'm going to change this. I may change it to $3. You know, you want to be able to, nope, this is not right because this should say debit. It should be a plus. It should be there shouldn't be a minus there. It should be a plus $3, right? We can do that. And that one just closed. And then we can look at the call credit spread side. You see between these two, it's not worth a dollar, but we took in $21 and it's now worth $1. So that's $20 of premiums we are keeping. When you're selling, you want to sell high and buy low. Sell high and buy back low. Or sell to open and buy to close. The Microsoft trade from a couple days ago, it might have been yesterday we did Microsoft, but the put credit spread side is ready to close. We took in $40 in premiums here, and now it's worth a dollar or less than a dollar, to be honest. Let's go ahead and close the put credit spread side. I got to change this to a dollar because you can't buy something that's not worth anything. So I bought it back for a dollar. But the call credit spread side is breached, right? 422.5 and current price is at 424. I'm leaving that one too because I want to see what happens in the with this afternoon. I want to see. Now, if this afternoon the FOMC shows that there's nothing going that's going to help my trade, then I'll go ahead and close them. Of course, closing them means I'm going to buy back for a loss, but I won't buy back for max loss. If I wait till tomorrow afternoon, it'll be max loss. Netflix put credit spread is ready to close. It's worth a dollar. We took in $60 for that one. I'm going to close it for a dollar. We took in 60. Close it for a dollar. It means I get to keep $59. Right? Okay, call credit spread is another one that is breached. Thank you, Netflix. 791 is current price, and I've got 780, 785. Netflix just moved. Everything moved after the election. Everything started to pop. This is election week, so everything, all the put credit spreads are doing fine. The call credit spreads, not so much. Okay, same thing with Triple Q. Triple Q is ready to close its put credit spread. I'm going to close it for my dollar, my $1, right? And then I'm going to go to SPY. Same thing. SPY was on the put credit spread list because it was bullish. It's also worth a dollar. We took in $18 and we're closing it for one, which means we're keeping 18 of those dollars. So, well, 16 of those dollars. Sorry, we sold it for two and we took in 18. Okay, let's go look at TJ Maxx. Yep, TJ Maxx looks like it's a call credit spread and it's barely just a little bit in the money. We got 116, 117, and it is between those two strikes. Now, I have one video that talks about rolling. You might want to consider rolling this because it's still in the middle, or you can also just wait and see what happens this afternoon like the other ones. Uber. Uber is a trade we entered yesterday. We received $16 on one side and it's worth 4. So I'm going to put a close order in on that. I will change it to $3. If I took in 16 and I close it for 4, that's 75%. If I close this for, actually it's closing for a dollar. So I keep almost all of that. I kept $15. The call credit spread, I've got 75 as my call strike. And we took in, it looks like $19 and it's currently worth 12. Took in 19 and currently worth 12. It's not ready to close quite yet, but I'll take us down to maybe a 505.19. That puts us about 75%, and I'll make this good till canceled. All right, confirm and send. That means it'll just stay in the working pile. And the last one is Exxon. Exxon on the put credit spread side, like all the others, is ready to close. We received $17. Nope, we received $18 and it's ready to close now for $1. $1. We can close it, so we're keeping the majority of those. And The call credit spread side, like the other trades, is breached. It's breached at this point. 119, 120, and the current price is 120 and some change. Again, I'm going to leave this call credit spread. I'm leaving all the call credit spreads on that are in the money, but I'm leaving them on to see what happens with this afternoon's FOMC and what happens tomorrow. So I'll give these a chance to see. But don't forget your risk management. 2x or 3x what you took in is a very safe place to be because you'd rather close the trade early and take your premiums off the table, close it, let your buying power release, or instead of just waiting to see if it goes to max loss. But doing that on the last day of expiration is good. That means theta is starting to help you out with premium reducing. All right. So if you've hung out with me for this time, know that we have a credit spreads masterclass where I talk through how do you select the stocks, how do you select your strikes, how do you enter the trades, how do you exit the trades, how do you defend your trades, how do you set your stop losses. I go through all of that stuff in the credit spreads masterclass that you can find at educatortotrader.com. All righty. Bye, everyone. Don't forget to like and subscribe.